Crypto Week surge is here. Today we'll break it down for you. My name is Paul Barron. Welcome back into the show. Let's get into it. I do want to thank our sponsor. That's Coinbase. You guys, of course, are brand new to the show. Get in on Coinbase right now. It's where you guys can begin your crypto trading journeys. And it's very easy to do. One thing you can do is if you use our link, you're going to get up to $200 in crypto just to get started. Make your first trade over there. And whether you're a business or an individual, you guys can do that there on Coinbase. Check it out. Use our link. It helps us. All right, let's get into a couple of points here of the CPI, slightly up or a little bit more than expected. President Trump is again posting statements after the CPI came in, and it did rise to 2.7, but he is still on it, and that is lower the Fed rate now. This is what Trump is looking for. Again, the opportunity is either massive because this will have an effect on so many different industries to readjust businesses that will go back in, real estate prices. We could see a lot that would add jet fuel to where this economy is going. Now, I want to go to a clip of Scott Bessent. He's talking about the CPI. Take a look.
Put too much emphasis on one number. I think it's the trend, and I think one thing that Wall Street, a lot of economists, market in general got wrong early on was that tariffs were going to cause a substantial price level rise, which just hasn't happened.
And there are some people on the FOMC, the Federal Reserve, still worried about the prospect of that happening through the summer. We've all sensed the frustration from the White House across the administration with Fed Chair Jay Powell. And a lot of confusion, I think, at this point that maybe we can address in this conversation. Is firing the Federal Reserve Chair under active consideration in the White House and the Treasury in your administration?
President Trump said numerous times he's not going to fire Jay Powell. He's working the refs.
All right, so you can kind of see it there. There's just a lot of pressure from the White House. Now, one thing that Bessent did hit on is the trend. And if you take a look at the annual, and you also compare this to what's happening in the UK, Argentina, India, most of these are up in terms of comparison to the United States. This, of course, coming off of Trueflation, which the trend is down if you go to the high, which was right back there on December 14th, when the market was booming, and we have seen a downward trend. And this, of course, is all since the tariffs have impacted. Now, one thing that also plays into this is you think about the UK and their inflation number and the fact that they have started to lower rates on the ECB. So the United States is definitely behind. Now, the question is Powell too late? Will this have an effect on the market that is longer lasting because of us holding off on these rate cuts? That is the real question. Now, tariffs are a big part of this. I want to go to a clip here that kind of breaks down how the tariffs might be massaged through the economy. Take a look.
When it comes to tariffs, what do you think we ultimately get or not?
So my view personally has been for a while that this is going to end up looking like a 10% consumption tax, sort of like a VAT. And the idea there is that it'll be shared between exporters, importers, and consumers kind of equally. We can live with that, right? I think that's the goal here it's a revenue generator. Okay, we can live with this. It's a shared tax across those three constituents, and businesses will figure it out. And I think that's why the market it's not complacent. It's just that's where it's settling.
All right, if that is true, if we do get a 10% shared, and if that actually seeps its way into the economy, then I don't know. What do you guys think? Do you think that would be something you would live with? Say you're at a 3.33% of your share of that kind of impact on the economy, but at the same time having the ability to have lower rates for house loans, car loans, being able to go out and take a loan and build your business, all those kind of things? Let me know in the comments down below. One thing, though, that is happening, and that is the AI race is on. The real question is how much continued impact will AI have in terms of the markets? I want to play a clip here that kind of gives us the trend. Take a look.
Look, one of our big themes this year as we came in was that AI CapEx was going to slow, decelerate, and then all that dropped in April. And I think that explains a lot of the sell-off in the first quarter and a lot of the recovery. It doesn't get a lot of attention, though. People are focused on tariffs, they're focused on other things that are going on. But the AI CapEx cycle has been very important for the overall market direction, first down in the first quarter and then the recovery in the second quarter. So the market has moved on from tariffs as the worst is behind us. It doesn't mean that we don't still have bad news or issues in front of us. but it's moving beyond that. And the big, beautiful bill did sort of wrap up a lot of the things that are now going to lead to positive things for earnings growth, both in the second half of this year and into next year. So as we said at the beginning of the year, President Trump came in, he's like a new CEO. They kitchen sink things, right? They did all the growth negative things first. And I think the big, beautiful bill is part of that positive transition now to really earnings growth more so than economic growth. And I think the market understands this. This is why people are very confused about why is the market up? Why is the market up? Well, earnings revision breadth has turned straight up. And we've been talking about this for 3 months. And the big, beautiful bill only supports that view further.
All right, so if he is correct and earnings do go up, that is going to have a definite domino effect on where the markets are going. If you look at the current crypto fear and greed, holding it around 70 right now, if you compare that to the TradFi markets, here's the fear and greed holding at extreme greed right now. Obviously, the market's up considerably. This, of course, all starts to play into risk assets and the potential to earn more income on some other assets out there as you diversify your portfolio. So all this could be going back to the point he's getting at, and that is look at AI, compare what they've been able to do, and if we start to see earnings numbers coming in from a lot of these top tech companies that starts to grow, you're going to see this ingested into the economy as a positive. Other things that are happening this week right now is 48 hours until history, and I would agree with this. Anti-CBDC Act vote comes in, Clarity Act comes in, that's tomorrow, and then on Thursday we'll get the Genius Act vote. So it's very possible that we could have clarity, we could have an anti-CBDC, and we could have a stablecoin bill all happening this week. And if that occurs, guys, I don't know how much more bullish we could see the market start to really move. One thing that you have to kind of consider is this right here, and this is that the House is going to hold their procedural vote tomorrow afternoon, or this afternoon, and establish kind of the terms around the Genius and the Clarity Act. Now, the key here will be if Clarity shows an indication that we could get market structure through the House, this would get interesting because that could give us an indicator that we might actually get this thing passed this year. And I've talked to 2 lobbyist groups here on the show just in the past week that have not been as confident that that was going to happen this year in terms of the market structure. If that does occur and we do get a market structure bill, guys, this will be huge for the markets in general. Genius Act, most likely about 100% going to happen. If you look at Polymarket right now, holding it at 95% probability, I would agree with that. I think Genius is going to fly through. The other thing that is happening this week, it's interesting timing too, and this is the Federal Reserve, FDIC, OCC, all of those released their joint statement on green lights for banks to custody crypto, so that's done. And you have FedNow, which is live, and then the ISO 20022. This is something we did a video on yesterday, why it's going to have a big impact on banks in general, the ability for crypto and digital assets to start to integrate into the economy. This is a big deal, so be on the lookout. Timing is very interesting. I asked McClurg about this yesterday. Go back and watch that video because it was a good breakdown of exactly what's going on. And his point was exactly that, and that is there are so much opportunities here, it's difficult to even get your hands around what this could do for the market in general. With that being said, you've got the vice president, the sitting vice president, J.D. Vance, saying crypto is a hedge against bad policymaking from Washington, no matter what party is in control. This is a great statement, and to me, it starts to set the standard for normalization for average people to start taking a look at crypto who have never looked at crypto before and say, wait a minute, maybe owning some Bitcoin and some Ethereum, a handful of digital assets is the answer here to kind of leverage against what I've seen in terms of inflation and also just the dollar de-dollarization. I think when you look at the valuation of where the Dixie is going, all of this is good and positive news. The other thing that came in that was positive news, this is the California Breakthrough Project. This is something that essentially is going to utilize a handful of blockchain companies. You've got Ripple, Coinbase, MoonPay, to advise their government. This is Gavin Newsom on efficiency and collaboration. Now, this will be interesting. I don't know if it's just a lot of fluff or if there's going to be something that will be executed, but the task force met for the first time in Ripple's headquarters. So it's possible there could be some integrations. Be on the lookout for this. There's also another company in there that you guys should pay attention to, and that is Snapchat and Anduril. So remember, Anduril, Palmer Luckey's company, very AI-oriented, mostly around the defense space, but something to keep an eye on of where this could go for both Ripple and XRP as it relates to California. Let's get into this. Bitcoin-backed loans now are starting to absolutely skyrocket. 1 billion of these in place. I anticipate we're going to see a lot more activity around this for a lot of people who are not willing to sell their Bitcoin, but they understand the likelihood that they have so much right now in profit that they'd be good in being able to go in, take a loan against that, take some profit, and or go in and start looking at other digital assets that they could play into. So I think we're going to see a big trend here on Bitcoin-backed loans. Another thing that's happening right now is Base and Brian Armstrong over at Coinbase setting up their big event, live keynote coming out. One of the things he said that I thought was interesting is from 3 to 4, a new way to create a new social network, a global economy for everyone. Next chapter of Base is coming. We may see the wallet app turn into something else. It may morph into a social-oriented platform that has payments as well as social, possibly some other cultural elements that may play into this. Let's see what Base pulls out of the hat and if they can go head-to-head with Robinhood right now, which has mostly been sucking up a lot of the air in terms of PR. Here's Vanguard now playing catch-up, and the way they're doing it is they have become the largest shareholder of MicroStrategy, MSTR and Strategy. And also, remember, they said that Bitcoin is not an appropriate long-term investment. So it's kind of interesting that they've had that position. Now they're the largest shareholder of the only company that really has been successful around holding treasury. And that, of course, is Michael Saylor and Strategy. Other things that kind of play into this, if you just look institutional capital, others that are playing catch up, they first of all can no longer ignore the returns that Bitcoin is providing. This is something we've talked about. And you have to think of it like this, guys. When you look at traditional money managers, you and I and anybody in the crypto space may say, hey, a 1x is not that much. Well, a traditional money manager, a 30% gain on a portfolio is legendary. A 40 or 50 or a 1x gain on a portfolio would make someone's career. So that is a big deal when we continue to see this asset moving like this. This is what they're stating right here. When an asset provides a return of 90% in 1 year, it can be ruled an outlier. I don't think so. I think now we're seeing much more confidence, not only in Bitcoin, but in digital assets as a whole, including around what's happening in ETH. And the thing that surprises me is this right here, another 260 mil into spot ETH ETFs. Get ready, guys. I think we could see some very big activity with Ethereum. And don't forget, there are some massive shorts piling into Ethereum right now. Are we setting up for this short squeeze that we've been talking about? I think it's coming. I think we are nearing, much like what we saw when Bitcoin broke out, because it's going to be like a pop, much like what Bitcoin was trying to break through that 110 zone and was able to do that by liquidating a lot of those shorts around 111. And obviously, Bitcoin skyrocketed to 123. It's regressed a little bit now, but the point being, this is where ETH could make a breakthrough. All right, so if you guys are not in the Diamond Circle, get in right now. It's our own private group. It's free. All you have to do is use the link down below. And of course, follow me on X @PaulBaron. We'll catch you next time right here on The Paul Barron Show.